Wow, America's largest bank CEO just warned that panic will overtake markets as US approaches debt default. So this is Jimmy Dimon, and he's the head of JP Morgan, which is the largest bank in the United States and probably the world. And he has just made some major dire warnings in his latest interview. Here, I'll show you.
I wouldn't buy sovereign debt anywhere.
Why?
I think there's too much.
Okay, so this Dimon guy is a billionaire himself, and he's the CEO of JP Morgan, which is obviously the largest bank in the United States, if not the world. And he just said the quiet part out loud. He says he wouldn't be interested in sovereign debt or bonds, government issued bonds, anywhere in the world, any country. Of course, meaning US and Europe and UK and all that. And you're not supposed to say that if you're the CEO of the largest bank of America, because that's all they buy. They buy bonds from US, UK, Europe, everywhere. You're supposed to support the world's financial system as we know it, not to criticize it. But that's what he's doing right now. Do you realize how big of a deal this is? What did he say next?
The amount of fiscal stimulus took place and still surging through the system, the amount of QE, these were extraordinary numbers. And not just in the US, but in Europe and in other parts of the world. And when I say extraordinary, I mean extraordinary. And therefore...
So what he means is he's criticizing both the United States and Europe, the European Central Bank, in making unlimited, right, bond purchases, unlimited QE, that's what he said, in supporting the economy during the pandemic times. But this is the kind of criticism you only hear from like people who are considered to be conspiracy theorists, like the gold bugs, or people who are Bitcoin maxis. But you don't expect to hear this from the head of the largest bank in the Western world. And he has just essentially said he believes both Europe and US, UK all printed too much money to support their economy. It was done way too much. But what consequences would that lead to?
There's a chance you have more inflation than people think. So while the Fed controls short rates, they don't completely control longer rates. And that you could see longer rates ticking up because of higher inflation. And even if there's a mild recession, they continue to tick up. You know, a lot of us experienced that in the 70s and 80s, and I would be a little...
So in other words, this is an amazing interview because his slip of tongue admits that the largest bank in the Western world is worried that the US government and the European and the UK government has printed too much money in their QE program and therefore it causes inflation. He's saying that we could have a repeat of like the 70s again, right? The 70s where inflation goes wild again. So this may not be the end of inflation. What do you think? Let me know.